You made the point about the market, people developing a herd mentality when markets become expensive. And it's a great point because, again, we are in the last few days in the middle of that, hitting all-time highs, 64,000 crossed, 19,000 on the Nifty crossed. The tendency will be that, oh, let me go and put lump sum now at this point of time. What would be your advice to people who say have already been doing their SIP or have not invested, but now suddenly see the Sensex at all-time high? And as you gave that example of seeing their friend doing something, what would your advice be? Should you put lump sum at these levels or stick to an SIP, even though the markets are high?
So there are two puts. There are two. We have been chatting about this since last 10 years. And last 10 years, every discussion of ours, the same, what I'm going to talk now, I've talked consistently over the last 10 years. I feel that if the retail, it depends on how much volatility you can take. I've given in the earlier part, I said that India is growing at 11%. So if you want to grow in double digits, your wealth, the only place to grow is in equity. If you see last 10 years, it has always followed that, right? EPS growth and the market growth over a long period will always be similar, right? So that is given. So I believe that the way how I look at India right now, though you said the markets are very highly valued, right? Right, we are at the highest point on the market as we are talking. But the PE ratios, if you see, right, the PE ratios are just above average. It's not that market is in a euphoric stage. If the average if the PE ratios, historic PE ratios were around 18, right now we are at 21, 22. So I am not saying that there is a huge overvaluation. Are the markets expensive? Yes, the markets are expensive. They're not. We are not talking about cheap markets. Right? We are talking about relatively slightly expensive markets. But also look at in the light of the earning per share where India is placed today. Every macro of how can you be bearish on India right now, right? I am talking from a fund house which has always been very given very cautious calls. But how do I give cautious call when all our macros are at the right place? Inflation, we have not done any excesses during COVID. Our inflation is in control. Our trade deficit is in control. Our current account surpluses, we are 0.2% is only our deficit, right? On the current account. We have seen when current account is in a proper place, when the balance of payment is proper, every macro of India is in place. So there is no macro in India that you can point out that this macro indicator, macroeconomics wise, we are very well placed. So macroeconomic wise, we are very placed. Banking sector is very healthy, right? There is not a single bank where you will tell me that it has got an NPA problem. So banking balance sheets are very strong. Corporate balance sheets are very strong. Corporates are majorly, there is hardly any leverage in the corporate. So as the demand grows, corporates are in a good position to leverage their balance sheet and grow, create more capacities, right? You are seeing that capacity utilizations of the corporates are going up, right? So as corporate capacity utilization gets to the full extent, they will grow their capacities. When they grow their capacities, they need not take more equity, they can take more debt. So that's good for the banking sector. That good for the many. And another thing that has happened is understand what has happened overall. That with the geopolitics as it is, without going into much detail, everybody wants another option to China, right? Every manufacturer in the world wants another option to China. Government has tried to promote manufacturing a big time, but more needs to be done on the manufacturing side. We are not a manufacturing culture per se as a country. So I'm not saying a revolution is happening in the India. Even if I don't say that a revolution is happening on the manufacturing side, but all our clients, every corporate that we speak to is getting more and more inquiries. So China plus one is actually happening at the ground level by more inquiries. So a garment exporter, is he exporting more this year than what he was exporting last year? Yes, he's doing. April, May, June of this year have been better than April, May, June of last year. He's getting more and more inquiries. So sector after sector, when you go into, they were at the bottom, right? Whether you look at banking sector, whether you look at auto sector, whether you look at auto ancillary, whether you look at chemical, everybody around the world wants an alternative supply chain to China. So manufacturing in India is growing well. So because of what is happening at the ground level, I believe that manufacturing, mining in India, all those sectors are expected to do well. And banking is in a beautiful space. So sector after sector, there are opportunities. So the market looks slightly expensive, but still it's a great opportunity. Whether you get into straight equity or you come into my favorite category, the balance advantage fund. That's what I was saying. Last 10 years, I've been talking only about that. So if you're a person, I can't give one advice to all because it depends on how much you are into equities already and how much volatility you can take. A person like me is always 90% into equities because I don't get scared with volatility. I get very happy when markets become volatile because volatility for me is to invest more,
Hmm.
right? Because I believe in the long-term story, right? That over a period of time, if I invest in equities, I'll do much better than any other asset class. That is a firm belief I have. So whenever there is a volatility, I am quite okay with volatility. Volatility is an opportunity. Volatility, if in my mind, is not a risk. In a
Hmm.
country like India, where we are growing at 11% per annum, I don't think volatility is a risk. Volatility is an opportunity. So if you have got the mindset like me that volatility is an opportunity, you can always come into equities and then wait it out. Even if there is volatility in between, you don't care because you are making money over the long term. But if you're a person who can't take volatility or gets worried on volatility, what we had done for this whole segment of people who are worried about volatility, we had said that normally people come into equities when the markets are at all-time high.
Hmm.
Then they don't have that good experience. And then when the markets go down, they actually get worried and they redeem also. So for all those, that is the way of wealth, destroying wealth, not making money. So we said people are pro-cyclical in this country. I can't change the psychology of people. So I'll create products which are contra-cyclical, right? Because in equities, if you have to make money, you have to behave contra. So what we had done 10 years back, we came up with a product called ICICI Prudential Balance Advantage Fund. What does it do in simple terms? In periods like this, it will invest less in equity. It will decrease its allocation to equity. And when the markets correct, it will again increase its allocation to equities.
Hmm.
So I believe that for retail guys who cannot take volatility, because suddenly there is a huge flow in the last 4 months, there is a huge inflow of foreign money into the country. Markets have corrected. So if they can't take volatility and they want to be careful in the current market scenario, they can always, at any point of time, they can come up with products which are, we call it dynamic asset allocation. That we move from equity to debt, from debt to equity, depending on the level of the market. Markets high, you reduce your equity. Markets low, you increase equity. It's automatic. Every day, my people buy or sell in those funds. So people who are worried about volatility can come in any of our funds, balance advantage fund, balance fund, or multi-asset fund. In every place, we are managing the money dynamic asset. So we manage around more than 3 lakh crores of equity. Out of that, 1 lakh crore is now dynamic asset allocation. And it has given a beautiful experience to the customer. If I tell you just in one line, it has only invested less than 50% into the equity markets over the last 10 years. And it has almost given 90% of the equity returns. What the Nifty would have given, it has given 90% of that return by invest. So you get 90% of the market by investing only 50% in the market. That's what it has done over the last time.